Good afternoon, everyone. If you are on the West Coast, it's still morning for you. So good morning. Thank you for joining us for our training on contract and assistant award terminations and suspensions. We have our two expert instructors joining us from BRG today. That is Rob and Clint. I'd like to thank them both for being here today. They are two directors over at Berkeley Research Group, so we are lucky to have them here for the next 90 minutes. Before I do hand it off to them, I do have some quick housekeeping announcements to go over. We're going to have some passwords throughout today's session. If you are seeking credit for today's session, please make sure you write down those passwords. That will be how you receive that credit for attending today. If for any reason when we wrap up today at around 3:30 p.m. Eastern, you don't see that course listed on your account, please email me at joshpina@publiccontractinginstitute.com, and I can get you all squared away with any passwords, certificates, PCI-related inquiries you may have. For any questions you have related to today's content, you can ask that in the questions section, and our instructors will be able to get those answers over to you. Additionally, if you notice any audio-video issues, anything like that, please let us know in the question sections. We can get that fixed for you as well. Finally, in our materials tab, we have a PDF version of the slide available for you to download if you have not already had a chance to download it. Without further ado, I'm going to pass it off to you, Rob.
Thank you, Josh, and hello, everyone. Alongside my colleague, Clint Woofter, my name is Rob McDonald. As Josh mentioned, we are both with the Berkeley Research Group, or BRG, and we work in their government contracts and grants advisory practice. And we have about an hour and a half worth of hopefully very substantive material to walk through with all of you on the topic of government contracts and assistance award terminations. And so we look forward to spending the next hour and a half with you and encourage anyone and everyone to pay attention and certainly ask questions as they arise. I think Josh is monitoring the Q&A. I'll also point out before we start, I hope you see the intro slide here where our names are at the bottom, and then along our signatures are Clint and my respective email addresses. If you want to jot those down, feel free to. I think many or all of you may have already received this slide deck as well, so hopefully you've had a chance to look at that, and you can always reach out to us after the session is over if you have any questions. Again, thanks for joining. Let me begin by just a very brief introduction about our firm and then the practice where we work. Berkeley Research Group is a global, virtually worldwide leading expert consultancy. We've got offices on most continents of the globe, about 1,500 billing professionals, and the firm is growing rather rapidly. We work in expert services in the areas of disputes and investigations, economics, corporate finance, and performance improvement in general terms. That's BRG. In terms of where our group, we are in a far smaller subset of BRG, the government contracts, grants, and advisory practice, and we live and breathe government contracts and assistance awards throughout our work week and work lives, for that matter. We help clients with a wide range of contract and grants questions and issues and difficult matters, to include, of course, claims and terminations, the subjects of today's webinar, request for equitable adjustments, which we'll get into if you haven't heard of that term, just general development of quantification and support for recoveries sought by clients against the U.S. government and other forms of state governments in certain instances. We do things like expert testimony and litigation. We have a wide range of compliance services we offer and provide, as well as just general, I call it business advisory services, growing your business. Really, anytime our clients have an issue throughout the government contracting life cycle, or when public funds are sought by our clients or at issue, that's where we get involved. I don't know if Clint, did I?
No, I think that's it. Yeah, absolutely. If you do business with the government, we can help from an accounting and cost perspective.
Great. All right, so with that intro out of the way, I do want to just say a quick brief word that I understand. Let me just sort of state the obvious that we are here in rather tumultuous times, and we want to say a word that we're very, very involved with a lot of clients dealing with terminations at the moment. Um, it can be a difficult, stressful time for many of you if you are going through contract termination, the termination process or assistance award process. And so hopefully this webinar will help you there. But I just want to say a word of empathy there, and we're here to help you out in terms of getting a little smarter on how to step through the process. Okay, let's proceed. I have an agenda slide here. I will kick us off. We have some statistics and some data that to sort of characterize the current slate of federal government terminations, where they're hot and heavy and where they're light so far, and a little bit of background, all very current, I'll say 2025 news. We'll get into an intro then into contract terminations, what they are. There is a fairly complicated, structured process to paint with a broad brush, and we'll get into some of that. We'll outline it. We'll talk about specifically what you need and should do upon receipt of a termination notice, how you want to think about where you sit from a business continuity standpoint, what steps you can take in the immediate nature, tactically, and then how you need to think about long-term steps that need to be begun if terminations are widespread. Talk about some of the details of contract types and some of the important nuances with respect to different contract types and how they impact the construction of a termination. And because depending on the type of contract, the procurement method under which the contractor assistance award is made, all that could have important implications in terms of the form and function of a termination settlement proposal that will be normally assembled and submitted to your contracting procurement authority or agreement officer. We'll also talk about what I'm calling a close cousin of terminations, which are stop work orders that have often accompanied terminations or preceded terminations in many instances so far this year. Talk about REAs, request for equitable adjustments, which is really a version of a settlement proposal on a termination, or I should say it's similar to a termination settlement proposal. However, the contract is not terminated. It is intended to proceed, so it's got many of the hallmark aspects of a termination settlement proposal. We'll touch on that. We'll have some lessons learned that Clint and I have gathered in some real current events. I'm talking the last several weeks, things we're seeing down in the real world, dealing with clients that are having challenges getting paid quickly. And then we have an accompanied reference section we can touch on if time permits. That's the lineup. And with that said, allow me to point out there has been a number of, I would say, we're probably over 100 in terms of executive orders from the Trump administration so far this year. I wanted to call your attention to some of the early ones. Now, I guess even today they're considered ancient history, perhaps, but they really, in January of this year, a lot of the activity that's happened in the last 2+ months or 2 months, 3 months rather, has come from that the executive order initially on the 20th of January, regulatory freeze pending review, which was an extremely high-level vague EO, and then the formal establishment that same day of the DOGE, Department of Government Efficiency. Another one that's had a big impact is the DEI executive order, also that same day. Many of these three EOs have served as a basis for a lot of the terminations and staff reductions across the federal government. There was also 4 days later a FEMA-related one that I thought was particularly important. There are numerous. This list is very lengthy, but I thought I would just in case you were wondering which ones serve as the most important basis for what the Doge is doing, here's a short list.
No, yeah, there's a lot of them. They're still coming.
Yeah. And so I've kept my eye on the Doge website, and there's other there are other public repositories of government contract termination data, without diving in too deep and slicing and dicing. I just thought it would be valuable to show um, where terminations are happening most. Um, Now,
Hey, Rob.
these terms, most savings, least savings, they're coming from the Doge website. This is what the Doge website says. But what the Doge is saying, yes,
Your audio did go out for a
gosh,
second. I think we're getting a little bit of a delay.
okay.
Um,
Why don't I talk a little slower and see if that helps?
I can hear you a little bit now. I think we're still getting a little bit of delay. What we can do is we can turn off the webcam on your side for a second, and then Clint, can you call in um, through the audio from your phone?
Sure.
So let me turn the web video off. Apologize, everyone. Let's see.
All right, Rob, can you hear me okay?
I can.
Okay, it seems like there might be less of a delay now. We'll have Clint still call in as the backup in case it does happen again.
You can mute it.
Okay.
My guess is that the video might have saved us some bandwidth, hopefully.
We did have someone ask if there was a new tariff on internet webinars, so that it might just be on the bandwidth.
There we go. I appreciate it.
It sounds like we're good to go now. So I'm sorry about
All
that.
right.
Take it away.
No, I apologize. Well, I will proceed again, and I appreciate the lighthearted response. Thank you. So I guess the point of the slide here is, look, okay, sorry, we were just dialing in as a backup. There should not be any repeated conversation problem here. HHS, GSA, Department of Ed, Labor, OPM, those are the hardest hit in terms of dollar value, contract value of contracts terminated. The top 10 on the left. And then on the right, you see the least impacted, number one being the least impacted government agency, DOJ, VA, energy, on down the line. So if you have contracts or assistance awards across the federal government, and maybe they haven't been terminated, but that doesn't mean you're necessarily out of the woods, of course. These lists can give you a sense and perhaps inform you with some business planning, contingency planning, what have you. As of yesterday, they were at 160 billion from the Doge in terms of what they're saying they've saved U.S. taxpayers. So I think this can be helpful in that regard, understanding the landscape. I have here, this admittedly is fairly dated information now, but what I liked about it, the Doge has stopped publishing dollar amounts by each agency, at least from what I can tell. Now, the entire database is published in Excel form, and I'm sure I could uncover a little bit more information. But this gives you a sense. There's been a lot of publicity about the USAID, and as of late February, and I don't know that it's changed that much. That was by far the largest terminated contracts agency impacted by terminated contracts. SSA, GSA, HHS, which is number one on the most savings on the prior list. I thought this was a nice representation of what you're seeing today and over the winter. Okay, so before we get into terminations, I think it's just important to understand kind of like, I think of business planning, business continuity. You obviously have to address contracts and awards that have been terminated. But even prior to the receipt of a termination notice, you should take a look at all your awards, contracts, grants, cooperative agreements, to determine what might be at risk or what's most likely to be terminated. There's a number of proactive risk management steps you can take prior to termination. We're going to get into a lot of the reactive steps that are needed post notice of termination. But a portfolio-wide review of contracts is a good thing to do. We are still in a fast-moving and unpredictable situation. I think it behooves many of the contractors out there to be conservative, delay capital expenditures if that's needed, at least consider delaying capital expenditures. Obviously, performance on existing contracts and closely monitoring the performance and providing all the contract administration is an important step. Evaluate overall business continuity. And again, it might be a good time to be a little more cautious to the extent you are a large or heavily impacted contractor.
Mhm.
Kind of stating the obvious, but it
Yeah.
just makes sense. It's a good business practice.
It is.
Yeah.
I think another thing too is also we need to watch the news. We are operating under a continuing resolution for this fiscal year, at least to the end of the government fiscal year, and the Congress can still, drop some rescissions here and there and cut agency budgets quickly through that process. And then knowing what's going to happen for government fiscal year 26, you got to watch that too, because they'll use the baseline will be this government fiscal year, post rescissions will be next year's budget. So if yours was cut this year, more than likely it's not going to happen again next year. So you got to keep your eye on that.
Good point. All right, so let's get into terminations itself.
Excellent. All right, so everybody's seen the most common one that everybody sees in the news are the termination for convenience, the T for Cs. Then we have the termination for default and termination for cause and partials and termination of unexercised. The termination for convenience is a very government-defined, government kind of thing. You don't see that in the commercial world. You don't see it in the commercial world.
Right.
I had an attorney ask me the other day who does taxes. He says, I don't understand how you can just conveniently cancel the contract and everybody's made whole. I was like, yeah, it's very unusual. So that's what we're seeing today, the T for Cs. The government says, you know what, we're just going to cancel it. We're going to make everybody whole and move forward. If you get the termination for default, that's not good news, and we'll talk about that later. Termination for cause, again, if you have a commercial version of the default side. So again, that's not good.
Yeah, I usually think of termination for cause is a little more of a commercial term for. I'm not an attorney, but that's often the more commercial term you might hear.
Right.
And T for D is like the government version of that, even though the government has a termination for cause category as well.
Totally
for
agree.
the commercial contracts.
Totally agree.
Well.
And when we're reading, as Rob just presented, $160 billion worth of contracts have been, quote, saved or terminated. To put that in perspective, and I looked, kind of did a little research before this, and back in the 80s, the largest one was the A-12 Avenger II aircraft.
That was a Navy aircraft.
Navy aircraft,
yes.
Yep. So that was a T for default. because they had performance and cost overruns, and that was $10 billion in today's money.
Wow.
And it took 20 years to settle through.
Let's hope nobody is facing.
Yeah, hopefully nobody's facing like that. So anyway, you kind of set the baseline here. Next, please. So along with those types of terminations, there's some key FAR clauses that come into play. FAR Part 49, 31, and then 12.4. So the most important one, I think, for this class would be, or seminar, or whatever you want to call us, is the FAR Part 49, the termination for contracts. So within FAR Part 49 has all the procedures, forms, principles, how you file, how you get settlements, how you get paid. It covers everything for all types of terminations.
Yep, and I just want to add, for those of you who might be newer or have new to government contracts, the Federal Acquisition Regulation is the Bible of federal procurement. It's got all the regulatory. It's a very thick book, and it's does not make light reading, but there are certain critical parts that Clint's pointing out here,
Right.
vis-a-vis termination.
Yep,
So
exactly.
okay.
So it's the guidebook right there. That's FAR Part 49. And then within FAR Part 31, there is a cost principal termination cost. It talks about what's allowable. But then also within FAR Part 31, you need to be aware of what's allocable portion of that too, and how you accumulate costs there. And then the FAR Part 12 really gets more into the commercial contract terminations and things of that nature.
And that just to clarify, that is a government contract commercial part.
Yes.
So it's called commercial, but it's the government's version of commercial.
Exactly. And then we'll get into the different types of contracts, cost type versus fixed price, and how contractors like you all on the phone can recover your costs. Next slide, please. So when we go through a termination, contractors are entitled to receive compensation. They're entitled to receive costs that they incur to have to go through the process of terminating a contract. They're allowed to receive any outside services that are used to help recover those costs, i.e. if they have to have counsel review contract T's and C's or things of that nature, or you have to employ an outside firm to help you total everything up and prepare forms for submission. Those costs are recoverable. The key is that costs should be fair and should really be reasonable and also allow for some allowance of profit. And it also should there's a lot of these costs are a matter of judgment too. So when you're going through and paying, let's say, for example, severance costs, you're using judgment there. These are things that can't be measured exactly at the time because you weren't prepared to do things like this. So I think, and also another thing here too is seeking out your contracting officer that's going to be helping you. You want to build that relationship so they understand what you're submitting, what kind of compensation you're submitting for. I think one other thing just to take away is you can't seek losses. So if your contract was losing money, you're not going to go and you can't seek losses.
Right, on fixed price contracts, yeah, you can't manage your TSP your way to profit, right?
Exactly.
And we'll get into that a little bit more
Yep.
and show you what we mean by that. Okay, so the role of TSPs in the development and achieving fair compensation. Clint talked about fair compensation. First off, we're talking about T4Cs exclusively, terminations for the convenience of the government. The government is terminated the convenience. Therefore, the contractor or awardee is entitled to fair compensation. It's a bedrock concept in the regulatory framework, notwithstanding the current difficult times we're in. These regulations for resolutions of T4Cs have been set up in order for the government to be incentivized to reach an agreement with the contractor. In other words, this is supposed to be a bilateral, equal footing, negotiated settlement. This is not adversarial. It's not litigation, anything near it. It's supposed to work like a business negotiation. That's the first point. Second point is, in order to reach that, many of these contracts that are terminated are fairly complex. There's a lot of moving parts, there's a lot of costs expended every week, every month to perform. And because they want a fairly quick resolution, cost and accounting data are important guides, but they're not rigid measures. FAR 49, which is the part of the FAR that deals with terminations and the rules around proper terminations, discusses this. I'm not going to read the whole paragraph, but again, if you have, for example, a cost type contract where you have to, you have something called allowable cost and payment contract clause, and you have to strictly adhere to the FAR Part 31 principles. This is not that. It's not a strict adherence. That doesn't mean you shouldn't try to adhere to it, and you shouldn't tout that you have adhered to them at the government, but there's no strict requirement. The amount of record keeping, reporting, and accounting kept to a minimum compatible with reasonable protection of public interest. Okay, so the government is trying to protect the public interest and pay the contractor. That's how it's normally supposed to work. We'll get into what's happening now in these unique times, but that's how it's supposed to work. You need to have verifiable accounting data. Ultimately, the amount is a negotiated settlement for T for Cs.
Mm-hmm. Whereas the termination for default, the T for D, is, as I mentioned earlier, is not a good thing. It can have major, serious, impacts on the business, not only at the time, but then going forward. And I think, these T for Ds should not, if you get one of these, it should not be a surprise. You've gone through, by the time you've gotten this termination for default, the company's probably already received, your corrective action requests, cars. I call them the cars level 1, 2, 3. You've gotten a car level 4. That's bad news right there. If you haven't corrected that, then then you get the cure notice, and that if you get the cure notice and haven't done anything either, and then the thumbs up and saying no way, Jose, we're not doing anything, then they can come in and just do the T for D, and then you've got it really kind of limits your ability to do anything as a contractor. You've almost, I don't say you've gotten to be at the point of debarment, but you're going that far.
Yeah.
And you face the prospect of having to return costs back to the government. You're not able to bill anymore for that contract.
As you failed to perform adequately, right? That's what the government is alleging.
That's what the government
and I would
is
just
alleging.
also an important point. This type of termination is not characteristic or reminiscent of what's happening with Doge.
Correct.
Most of the current terminations are T for Cs,
Yes.
not T for Ds. But we need to cover this because these happen.
Yes, exactly.
And they happen consistently.
So,
but they're not characteristic of today so much.
Right.
Yeah.
Right. So I don't think these are happening today. I mean, they probably are, but not at the scale, and they're not as widespread. Okay. So as I mentioned, there are differences between the termination for convenience and the termination for default. The big one there for default is there's no more invoicing. You're done invoicing for a while. Whereas the termination for convenience, you're still able to recover costs and invoice for costs up to the termination. You're able to then, as we get into this, develop your package and start coming up with the cost to actually shut down the contract and start recovering those. And as Rob mentioned earlier, it's more of kind of a meeting of the minds. This is what's reasonable. This is how everybody can be made whole, as I call it. So those are the big differences. Whereas the termination for default, as I mentioned, it's a lose-lose situation for the contractor. It costs a lot of money. You lose a lot of money, and it's bad going forward. So as we get into this, We are slide 14. So as we get into this more, it's now we've got to figure out, okay, we've got this termination for conveniences we're going to focus on in this section. And how do we prepare to get reimbursed? How do we go through and figure out what we need to do to recoup our costs for this action? And I think navigating this is not easy. There's a lot of work that has to be done by the contractor to come up with a proposal. You need to come up with your costs. I think as we go through this, you need to make sure you're going through that process. But I think most importantly, from the contractor's perspective, they got to make sure their employees are taken care of. They're worried about that. They're worried about their subcontractors. What's happening with them, and then they also got to maintain a positive relationship with the government at the same time, knowing that the government is canceling this contract. So there's a lot of balls that have to be juggled as we get down into this process, and it can be very confusing, but it's also can be very I don't want to say easy, but very practical through this. There's steps to do. Follow the steps. You'll get through. You'll get paid. I mean, I think it's one thing that contractors have on their side are the regulations are there to make the contractors whole. The government's not going to say we did this T for C. We don't owe you anymore.
We are seeing already companies getting paid for submission of TSPs for this year.
Yes.
Okay, it's already started. So I think we'll get into some of the unique observations.
Yes.
There's a wide range of what's happening out there.
Yes.
And it can pay off is the point.
Okay.
Okay, you receive a termination notice. Let's talk about that. So, all right, the first thing you're going to get a letter, or you have received a letter. It's fairly standardized. It's going to state that the contract is being terminated for the convenience or default. And refer to the proper contract clause under which the termination is authorized. It's going to provide the effective date, extent of termination. It can be partial or complete. If it's partial, you have to identify what was not terminated and continue to perform. Any special instructions will also be provided in the letter. All right, so what do you do immediately? I know this is kind of a lengthy list. I'm not going to read everything, but here are some steps to take. First and foremost, you need to, I think Clint mentioned this, you need to provide notice to your subcontractors, your sub-awardees. You have to look at the flow down clauses, understand, essentially put together your own termination notice letter for your sub-awardees, and subcontractors. Provide instructions to them based on your subcontracts, the terms and conditions of your subcontracts or awards. And also, providing special instructions about requirements for remaining work, failure, the ceasing of all further subcontracting on their part, what have you. Stop work on relevant portions of the contract or all the contract. Again, follow directions. There are a few rare circumstances where you need to proceed, but for the most part, you need to carefully follow the instructions and stop work on the relevant portions, and then begin the process of accounting for and documented termination-related activities, inventory, cost, time, what have you. You need to inform your employees, decide how to handle a termination with your employees. There are a number of things you can do. Most firms are choosing to furlough and or lay off or keep a certain portion on board depending on alternative work, the government, non-government contract mix, really a range of factors. You need to process the inventory records and dispose of performance related to inventory. So this, of course, is to both services providers and product providers to the government. You have to around inventory management and the how do you handle WIP? How do you stop the production process? How do you begin to assemble inventory terminated inventory schedules. That's the thing. We have an intro to some of the standard forms we'll touch on later. Protect property, protect costs, and storage is all a part of normal performance anyway, and that does not change under termination. You need to document your conduct and costs. You need to, it's very important to involve accounting immediately to set up additional charge codes that are specific to a termination, both on the direct side and the indirect side, which will allow for tighter and more organized termination settlement proposals that are better supported and increase the likelihood of being paid quickly. And you need to retain legal and cost consultants where applicable. Those costs for external settlement related costs are per the regs an allowable cost, so they can be included in the termination settlement proposal. So the contractor, you or the awardee do not need to pay them, or you will be reimbursed by the government per the regulations for efforts of legal law firms assisting and folks like ourselves.
Wait, we got a question, Rob?
Yep.
How exciting.
Yes.
Is the prime responsible for providing a process for subcontractors to submit a termination settlement proposal?
Yes, you are. And I would look at your, first of all, the first step is the subcontractor or subawardee does not have privity of contract with the government. So you are their only channel. And what often happens is you will immediately inform them, tell them, and the right thing to do is to tell them to put their own termination settlement proposal together. And then they will submit that to you. You work on yours at the same time. Then you add theirs to yours, which goes to the government as part of yours, essentially, right?
It's almost like putting together your original cost proposal, but now
Right.
here's the cost to terminate.
Right.
And the sub will give you their cost to terminate. It probably won't give you the indirect, the rates. They won't give you details on rates and things like that are proprietary, but they'll give you they should give you all the direct costs.
And another thing to build up is this is not a quick process. There's a lot of work that goes into this. And for that reason, you need to be current on your invoices. Mm-hmm. And you need to be talking to there's some takeaways. You need to be talking to your COs. And if they're telling you to invoice, you need to invoice, because that's a far, far easier process to get paid quickly that might take some of the pain away of waiting with a TSP to be mm-hmm. negotiated and agreed to.
Yeah.
Yeah. So despite having a year, despite the work that's involved, here's the tough part. It's still critical to be as quick as you can and to be as accurate as you can. It's not an easy time. You can if you didn't set up unique charge codes and it's hard to identify termination related costs, there are ways you can get around that. You can provide estimates that are well supported and well thought through. So the use of estimates is permitted. Cost data from accounting systems is the best form of support, but estimates are permitted. Engage with the CO, monitor communications with the CO, follow instructions. Again, I know that USAID sent out some agency-wide instructions to invoice to a certain date. Those are instructions you need to adhere to that are just make life easier. You can summarize cost records. You don't need to hand them over, reams and reams of data. Set aggressive internal deadlines for completion, submission, meet them, involve external advisors as needed, and frequently talk to the CO following submission. All right, implications of various contract types on contract terminations for convenience. This is where we're going to get into some of the nitty gritty. All right, so here we have a slide.
Rob, can you hear me?
Yes.
So your audio is going in and out again. I'm going to put up the first password now, and then Clint, can we switch over to the audio from the phone. So our first password is total, capital TOTAL. Total is our first password. As a reminder, if you're seeking credit, please make sure that you are writing these passwords down. That will be how you receive credit for attending today. We're going to have 3 passwords today. So we'll have our next one around 3 p.m. Eastern. If you have any questions about the password certificates, if you don't see the course on your account after we wrap up today, please email me. My email is in the chat. That's joshpina at publiccontractinginstitute.com. I'm going to take that password down. And then we did have another question that came in. Clint, are you on right now?
Yes, I am. I saw that. I told the gentleman that we would get back with him after this, after the
Okay.
seminar.
Are you on through your phone or through the computer audio?
Computer audio.
Okay, let's try to switch to the phone to see if we have less in and out. Sorry about this, everyone. Just be 1 second. And then Clint, whenever you are good to go on your phone, just let us know. As of right now, Clint, I cannot hear you if you are talking.
Josh, can you hear me now?
Yes, I can hear you through the computer.
Right. So the problem is we're not sure how to mute ourselves on the computer, I think. We can hear you on the phone, but I'm also hearing you through the computer, which we need to turn off.
Okay, well, if we are going to,
I thought I did that.
If you're able to use the phone, then I can manually mute you, your mic through the computer, and then you can just hit the mute button for the audio on your keyboard. But I want to make sure that we're able
Let's
to.
try that. Let's try that now.
Okay. All right, Clint, I do not hear you currently. Sorry for the delay right now, everyone. We're trying to make sure that doesn't keep breaking up too much. All right, everyone, just gonna be 1 more second. I apologize for the break here again. We should have Rob calling in from his phone shortly.
Josh?
Yes, I can hear you.
Great. Oh, thank you. All right. Apologies to everyone. Technical difficulties, but I think we are back on track. So shall we proceed, Josh?
Yes, we can. If you just want to put the slides back into slideshow mode, then we will be good to go. And then in the next 15 minutes or so, we'll do the second password. So the show is yours.
Let's see, share. How's that? Can everyone see that?
Yes, we can see it. All right. We are good to go.
Thank you. Okay, so now we need to take a look and move from the general speaking to the more specific. For those of you that have already, now you need to take on the tall task of assembling a termination settlement proposal. We talked about the FAR. We talked about T for C's, terminations for convenience. We put this decision tree together to give you a sense of what decisions need to be made, or what your circumstances need to be assessed to figure out what standard form to use and what approach to take. In most cases, often you have a FAR Part 15, which is contracting by negotiation, which can either be a fixed price, a firm fixed price, or a cost reimbursable contract. If they're T for C, the first important distinction is it a FAR 15 or 14, which is sealed bid? I think is very rare. Or is it a FAR Part 12 commercial contract? If it's a FAR 15, then you need to understand whether it's a fixed price or a cost type contract. And then on the non-commercial or FAR 15 side, the fixed price has one more fork in the road. You need to decide whether to put your fixed price FAR Part 15 termination for convenience settlement proposal together using the total cost basis or the inventory basis. We'll introduce both. That's where there's a little bit of complexity here. Cost reimbursable, it's one form, 1437. That looks a little bit more like the total cost basis. We'll introduce these, but I'll also describe the rows in red on the left. Again, first acquisition method, 15 or 12. Contract type, is it fixed? Is it cost type? In the majority of cases, a commercial contract's a form of a fixed price or fixed unit price. And then you have these calculation, T for C calculation methods and standard forms to use. So there are important differences between the fixed price contract and cost reimbursable contracts. With a fixed price, you're only going to be paid for work completed up to the termination date. That termination date is very important, as well as costs directly associated with or related to the termination itself. On a cost reimbursable contract in a termination scenario, it looks more like reimbursement for normal vouchered costs during performance. You basically get all your allowable costs for per FAR Part 31 incurred up to the termination date, including costs related to the wind down. There are also similarities. When you get a T for C non-commercial, that's a FAR 15. Essentially, what happens is even for an inventory basis, a fixed price contract gets converted to a cost type contract in the sense that there's no fixed price for the termination. You're performing a cost buildup analysis to submit as part of your TSP, which would be similar to like pricing a cost reimbursable contract, right?
It gets very confusing.
Yeah, it can get confusing, but this is the way to go about it. Yeah. All right. So terminations of fixed price contracts is a little bit more. We talked about the total cost basis and the inventory basis. When the inventory basis uses something called the standard form 1435, a total cost basis uses the 1436. With the total cost basis, you're getting, the way you present the cost data for a total cost basis is you are accumulating and reporting all of the costs associated with performance since inception. It's the whole set of costs. You're going to back out invoiced and paid invoices through the termination date. With an inventory basis, you're only going to include the costs and profit in the settlement proposal associated with the units or services terminated. So it's a smaller slice of cost data. It's used more frequently in the manufacturing setting, and in many ways, even though it's a smaller set of data, it can be more complicated, and particularly if you're consultants with lots of, if it's pure services, in consulting services, the total cost basis can be more intuitive, in my view. And below you see, and I'll add, there is a stated preference on the part of the FAR for the inventory basis, but I think in practical terms, we would recommend a total cost basis if you can obtain your CO's permission to do so. Again, for those of you contract geeks, we've got some specific T4C clauses that are referenced in notices at the bottom, FAR contract clauses.
All right.
Clint's going to talk about total cost
basis. So as mentioned, the total cost basis, it's putting together a cost proposal. This is the cost to terminate this contract from our perspective. I always call it, it's similar to putting together your annual indirect cost rate proposal. You've got, all the costs have got to be supportable, or you're pulling together your NICRA for the year. Again, all your costs that you're putting in these are supportable, but they're supportable with actual costs. And that's the key word, actual cost here. So you're going to include the material and the labor and any indirects that are being applied. You're going to include any costs that are allocable to the program or to the contract. And you're going to have acceptable evidence to support that. So you're going to have journal entries, you're going to have labor timesheets, things of that nature. Next slide, please. So as mentioned, the key here is, as I mentioned, the costs, they're going to be allocable, they've got to be reasonable. You've got to have the acceptable evidence to support it. You've got to have accepted, reliable indirect rates being applied. Are they the latest approved billing rates? Are they your latest annual indirect rates that have been submitted? So you want to make sure you've got some evidence behind that. And then also, you also want to include any items that might be credited or moved to another contract or production. So you want to be able to credit appropriately items that are not going to be part of that contract anymore. Next slide, please. So we talked forms. One more. There we go. So we got a lot of forms. We've talked all kinds of forms. The government loves forms. Forms. Standard forms. Standard forms. Yeah, it's got to be standard. I've never seen a not standard form like that. Anyways, a lot of forms. So we've been focusing on the SF 1436 and the SF 1437, which are standard forms that have to be filled out. Now, these are one-pagers, but the support behind these forms are going to be more than one page. Dozens of pages. So you look at it, you're like, one line item is your labor. Well, you've got to build all that labor up. One line item is your indirects. You got to build all that up. One line is your ODC. Well, you've got all kinds of ODCs. So you got to build that up. And then you've got another form there, the 1439, which can be forgotten because it's just your basic schedule of accounting information. What that is, it describes how you account for costs within your company. It's almost like a mini policy. It says this is how we do direct costs. This is how we do indirect costs. This is This is how we accumulate labor, things of that nature. It's kind of describing your policies as well. So that's important. And then you have an inventory form that you have to complete if you have inventory on the contract. I think that's important. If you don't have inventory on the contract, well, then there's nothing to complete here. But that is also something that you should put in this. That's all I have on that one.
All right, great. We put together just a very simple example, overly simplified example to convey or show what might happen with a total cost basis. So you see on the left, it's a fictional example for total costs for direct cost elements, labor and material. You see these would be reflected on a 1436 if it was a fixed price, total cost basis standard form. And the total cost basis collects material, direct labor, indirect factory expense, which is typically fringe and overhead, not G&A. That's a standalone line item, as you can see there. But it claims them as lump sum items rather than allocating to specific inventory items. Once that total cost picture is presented, there's a profit that is permitted on those types of costs, the existing profit rate for the contract or some well-supported, independently verified, or independently calculated, rather, profit rate. That's beyond the scope of this discussion. We can talk about that in another forum, perhaps, if you're interested. You are to deduct the completed work invoiced or to be invoiced so that there's no double counting. Then, after that deduction takes place, you add settlement expenses for people like ourselves and attorneys, as well as subcontracts and any other allowances, partial payment deductions to arrive at a net settlement requested. That's kind of how it's presented on a total cost basis. It's a little more complicated on the inventory, but we wanted to give you at least a flavor.
So what costs are recoverable? As I mentioned earlier, we got the FAR Part 31 with allowable and unallowable. Obviously, you're not going to be able to recover, your closing party and those, if there is a party, but it's probably not. But things that you do have to keep in mind here, outside of just your regular termination type costs of severance and any statutory payments that have to be made to the staff. You've got a facility or maybe an office that was there. You've got to close that down because it's probably not being used for something else, or maybe it is. But if you have to close, you've got lease costs and termination costs to close the facility. Well, that's something that the government will pay for because, if it weren't for the contract, you wouldn't have had this building. So now you've got to close the building. And so you can recover those costs. I think another piece that is not probably on this list are things like maybe specific software, or maybe there's security at your building that you've got to now you don't have them anymore, but you have a security contract for a whole year. Well, you're going to have to pay that out to get out of the contract. You lost the contract, now you've got to pay for these things. And then another key thing that I think Rob mentioned way early in this presentation was the cost for I call it the G&A folks that are pulling these things together. Those are recoverable. They're not going to be recoverable for your G&A. They're going to be recoverable as a direct charge into the proposal. So the time that's, let's say the time that you have an analyst or you have somebody in HR going through all the severance, they'll charge that time into the termination project, and you'll recover that, not at the G&A rate, but as part of a direct charge. So you get that, and you need to set up, as Rob mentioned, charge numbers. So there are a lot of things that you don't normally think about, but when you have to put down an office, or a site or a contract, there are, those ancillary costs that you have to think about. Mm-hmm. Turning off bank accounts, things of that nature. Closing down a legal entity, for example. That there is money involved there. Okay. So you submitted it. Now, technically, according to the regulations, anything over $2 million is subject to audit. So if your claim, it's not a claim, if your proposal is over $2 million, It is subject to audit. The government can come back and audit it. As I mentioned, you want to make sure you have solid records to support everything that's in that proposal.
I suppose in this day and age, that 2 million number might be more like 10 million.
It might be more like 10
I'm
million.
just guessing.
If they even audit it at all. I mean, that's one thing that's it's been talked about, yay and nay. There are audits, there are no audits. I have not seen an audit of any of these proposals yet, but who knows? The DCA just reorganized themselves, so maybe they're preparing to do a whole bunch of audits. And if your proposal is under $100,000, I think you don't have to have an audit. It's just, you can just be submitted and the government should just pay it pretty quickly. But again, I don't know, who knows what's going to happen in this day and age. These will be audited for like a price proposal. They'll want to see the basis of estimate, or excuse me, the basis of cost being submitted. There aren't estimates here, it's all actuals. They'll want to see labor reports. They'll want to see project reports and showing how much cost has been incurred. If you've invoiced, they'll want to see the invoice. And if you've collected money on those invoices, they'll want to see that too. If it's a fixed price contract that was terminated, they'll want to look at profit to make sure you're not gouging the government for additional profit beyond what you've already been making. So with that, I think the next one, please.
All right, this is my slide. So I mentioned the commercial products and services contract, which is a type of contract where the government attempts to contract with vendors in a similar manner to a commercial contract. So it does that when products and services are of a like or kind that is similar to an entirely commercial environment or setting where the government's not involved. And so they correspondingly have a unique way of having contractors assemble a termination settlement proposal under a FAR 12 contract. And it's more of a price-driven method or milestone-driven. So let's say, for example, you have sold a fixed price FAR 12 commercial contract for $100 over 2 years. You're providing some service, and you can do it. You basically have to come up with some supportable method to measure performance as of the termination date. The preference is for some milestones. So if you're providing products evenly through the performance period, you can use that percent of what's been provided versus what was to be provided. That fraction is multiplied against the contract price. That is the first of two prongs for recovery on a FAR 12. And that is what's represented in that top quotation in that first sub-bullet. You're entitled to a percent of the contract price reflecting the percentage of the work performed prior to notice of termination. Separately, you get, quote, reasonable charges that you can demonstrate result from termination. That would be severance and wind down costs and more, even on a FAR 12, they use the term charges, but it's basically costs that are get added to that first prong. The method could differ a little bit with a T&M or labor hour contract. You can use a T&M set of rates. The modified price formula that I just described, it's exempt from Truthful Cost or Pricing Data Act. That's not something we want to talk about here, although that could be a very onerous requirement. So that's good for FAR 12. You don't need to comply with FAR Part 31. You don't need your records, or the government does not have a right to audit your records. You can really you have more freedom to craft the TSP itself, the structure, the form, et cetera, what it looks like. There's no standard form, for example. And this also applies to simplified acquisitions, FAR Part 13.
Mm-hmm. So with terminations of cost type contracts,
On the other hand,
on the other side, yeah, there's a lot of differences. First and foremost, I think when you get that, you've got a cost type contract and it has been terminated. It's important to invoice, as we mentioned, all allowable costs up to the termination date. Get that invoice in so that they can get paid. because that'll go through, it should get paid pretty quickly. Because that's just regular work that's been done, that's been part of the contract before the termination date. So this is where it gets kind of confusing, and this is where you really have to step back and think, okay, what's the path we want to take? And there's a lot of factors that weigh in on that path. Cash flow, life of the contract, things of that nature that the company has to think about. You can voucher termination costs for 6 months after termination. Okay, well, that's, it's going to be dribs and drabs here and there for 6 months. And then after the 6 month period, then you have to submit the proposal. But you have 1 year to submit the proposal. So, we're seeing people just going right to submitting the proposal, not wasting any time. Let's get all the costs together. Let's put the proposal together and get it in.
Meaning putting together a termination settlement proposal rather than your typical voucher invoice.
Right. Yes. And these are with some of our clients that have a good chunk of T4C contracts in it. Other companies who don't have that many T4C contracts might go down the route of just, okay, for the first 6 months, we'll just start submitting the cost as it comes in. But again, that's in a position that it's a company by company decision.
Okay, now we're going to also touch on assistance awards. They've been a prominent category of terminations. And so grants and cooperative agreements constitute assistance awards. They are a different beast. I mean, they're not, they're called assistance awards for a reason. They're assistance agreements. They're not, typically they do not have profit. They're not part of the procurement or acquisition process. They're really there to promote a federal government goal. And so they are governed by a separate set of regulations called the Uniform Guidance rather than the FAR. And they are less well-developed regulations vis-a-vis the submission of terminations, and that is putting it very lightly. They are, it is the Wild West compared to this contract scenario. What we have been telling clients, and it makes the most sense in the various termination forums we've been a part of over the last several weeks on a weekly multi-instance level every week, is that use the cost type structure for submission of an assistance award termination settlement proposal. That would mean using, for example, standard form 1437, really and pretending as if it was a cost reimbursable type contract. There are important limitations and exclusions. 2 CFR 200 is the uniform guidance, and 2 CFR 200 subpart E cost principles is I'll call it the sister section to FAR Part 31 cost principles in the FAR. That's an important aspect. Also, 2 CFR 200-403 allowability of costs. That stuff matters with these because we are recommending you use a cost reimbursement type contract structure for submission of a TSP. I hope that's clear as mud for some of you. But that's the thing. Just when you come across this award, it really is just you employ that cost reimbursable contract framework. All right, so we thought we'd wrap up a bit of this more detailed discussion with some best practices for TSP. The prudent person rule has been around. Yes.
Sorry, before we do get into that, can we put up the second password now?
Yes.
It is up now. That second password is the word cost, C-O-S-T. Cost is the second password. As a reminder, if you're seeking credit, please make sure that you write these passwords down. If you have any questions about password certificates, anything like that, please email me at joshpina@publiccontractinstitute.com. Again, that second password is cost. All right, it is all yours. Thank you.
Okay. All right. So, I think the first thing to keep in mind, now that we've delved into some of the minutiae here a little bit, keep these best practices in mind. Costs must be reasonable, acceptable by a prudent person in the conduct of competitive business. That's the way to think about this. You are encouraged, if the contracting officer is being obstinate, or you need to support your costs with sufficient certainty so that the determination amount will be more than mere speculation. But you don't need to strictly follow FAR 31, for example, in most cases that are not cost reimbursable type scenarios. So it is a balance to strike. I know that's not a strong answer, but there's a needle to thread there on this topic. It is a good idea to stick to allowable costs, standards of reasonableness, allocability, cost principles. Also, a good practice is, particularly as Clint talked about, how you see senior management getting bogged down not bogged down, but having to deal with this on an immediate basis. You see all other indirect functions that get pulled into the termination process. Charge account numbers should be set up so those costs and time and effort, et cetera, can be tracked. For fixed price contracts, you're permitted a contract profit on your costs. However, if the contract was in a loss position, you get a decrement based on that ratio of loss per position. And so how they calculate that is you've got to provide an estimate to complete as part of that. It's like a side calculation. You need to show the government that, hey, look, we were managing this contract profitably, so we are entitled to profit on our costs resulting from this T for C. Submit a timely proposal. It says within 1 year of the effective date. That isn't eons, I know. That's the time you have. The real answer is much shorter than that, in my opinion.
I got two takeaways from this, Rob, is, don't speculate. Don't put a guess.
You can estimate.
If you've got support behind that estimate.
Right.
Don't just kind of like, oh yeah, I think it's going to be $500 for the flight. It's a proposal, so you need to have something behind it. And then the other one, like it's a proposal, something behind it. You need a good audit trail.
Yep, we do. I know it might sound a bit self-serving. We recommend professional help, including people like ourselves. Our costs are permitted via the regulations for reimbursement. It is a very unique, nuanced world. All right, so this slide, just want to underscore the multifunctional aspect of pricing a TSP proposal. You're going to involve everyone: cost accountants, financial accountants, contracts, engineering, program management, senior management, legal, of course, sales and marketing, even HR. It's a cross-functional effort, and it tests your project management skills for sure.
It definitely does. And then the recovery of the costs. They have to, as we talked about, FAR 31 comes up again. The costs have to be allowable, reasonable, allocable to the termination. Again, you capture the cost, the travel costs, the site closure costs, things of that nature. Allocable, you've had to turn off, let's say they're running some special software and a couple contracts are running that software. Well, you got to turn it off. And so those two contracts will have to, have costs associated with turning off that software. Reasonable, prudent. You're not going to, give everybody $1 million severance if you don't have a severance policy, but you got to be prudent in what a reasonable person would do in business.
All right, we need to say a word on what happens if it doesn't work out. What happens if you submit the TSP and they sit on it, and you just, course of action. It's why it's really important to have your government contract lawyers involved from the get-go. But at some point, if you're not satisfied with the response of a TSP that's been submitted, you're able to certify the amount as a sum certain, meaning your senior officer signs it, essentially a standard form, and seeks a contracting officer final decision, which begins a stipulated clock of 60 days that the CO or the agreement officer has to respond. I guess mainly in the procurement world to be the CO, and if that response is contracting officer's final decision is not made within 60 days, you can submit this under the CDA Act of 1978 and essentially initiate formal litigation against the government agency. And we help companies with that process as well. And that's a little different than the TSP REA process. All right, I talked about the close cousin. So many of these TSPs or terminations have been preceded by stop work orders. I'll let Clint touch on a few of these points.
Sure. So a lot of these have gone through, first typically you'll get the stop work order, and that's when you put your pencils down and say, okay, now we're stopping. We're not going to perform any more work right now on this particular grant or contract. We have to see, the government wants to know where they're going to go. The contractors have to comply with the order. And so typically at this time, you'll set up a charge number and start accounting for any costs that are associated with this stop work order. And then from that period, typically what happens is you'll get termination for convenience shortly thereafter. But, you got to be very cognizant when you get that stop work order in that you respond to it and you truly are not able to invoice any costs post that stop work order. So as mentioned, you're going to get you comply with the terms, take steps to minimize the incurrence of costs. Obviously, you can't, if there's air conditioning on, it's a little hard to turn off the air conditioning, but you can put your pencils down. So the stop work order can be canceled and work can resume, or it can be extended. It's just it's a pause. It's truly a pause. And if work does resume after the stop work order period or the SWO period, the contractor is entitled to a price or delivery adjustment. If there's going to be an increase in the time to deliver or increase in cost to perform, the contractor is entitled to that. So that's something to think about there. And you have to assert your rights to the adjustment within 30 days after the end of the period of work stoppage, and work with your contracting officer to ensure that you're properly reimbursed for anything from that SWO.
Okay, so Clint mentioned the entitlement to an equitable adjustment or a request for equitable adjustment. And to put it at a very high level, very basic, practically speaking, an REA, the only difference in an REA and a TSP is an REA is where the contract continues performance and a TSP is when it's terminated. So often, let's say, as you alluded to, performance resumes, or they tell you to resume performance and it's not terminated, or they don't even say anything. You sort of stay in this endless SWO state. And they have a right to make changes to during contract performance, and a change would be a SWO, a stop work order. That's often a contract clause. Well, as a contractor, in those circumstances, you have a right to an equitable adjustment for the cost impact. Same kind of practical format. You don't have the same standard forms, but the idea of a TSP is the same with an REA. You need to have two things. You need to be entitled, i.e. the government was responsible for the delay, the impact, the SWO. With a SWO letter, that is a terrific piece of evidence for that. You need to say the contractor could not have prevented the additional costs. This is costs incurred outside the original scope of the contract. Once entitlement is established. Quantum must be calculated. Evidence that costs are reasonable, that they're necessary, that you've been made whole, does not allow for loss due to other contractor inefficiencies, or same thing with the loss provision. Essentially, you cannot be in a major loss position. You're trying to get well via the REA. Focus on increased costs to the contractor. Here's just a visual of the process. Increasing cost is a change, delay, or differing site condition or SWO. You need to demonstrate that the work or site condition was different, i.e. the SWO reasonably different from what was reasonably anticipated. Again, must prove that the change is to impact its contract work. Again, it's more entitlement. And then the last square on the left to right arrow, the contractor must show resulting injury or additional costs. You need to develop and implement cost document, the things we've talked about, project cost documentation, procedures, and being very diligent on the accounting side. Okay, so that is a little bit of words and descriptions of an REA, just to distinguish them a little bit. We thought we'd leave our remaining time to talk a little bit about real current events, kind of what we're seeing, or just sort of restate some important takeaways.
Yeah.
Right, Clint?
Absolutely. I think the first one that I've seen is, you don't rush these. There's a lot of moving parts.
Yes. Yeah. Yep. And you need to make sure you're listening to any communications. The problem is a lot of these large parts of these agencies, people have been removed. They've taken the fork in the road, right? They've been laid off, and we've gotten questions of like, I'm not getting any response to my inquiries, and it's difficult. There's no silver bullet here. You've got to establish or maintain your lines of communication. Take advantage of in a lot of cases, agencies are communicating broad instructions to contractors about what to do with terminated contracts for those agencies. You need to be aware of them, and a lot of times you can save a lot of headaches by submitting invoices or even what we've called an enhanced invoice for SWO and that sort of thing, where you're not even getting to the TSP assembly level to get most of your costs done. And then you can, let's say you submit those invoices, you can be working on a TSP during the same period that includes the amounts in the invoice, and have it just clearly annotated that in light of if and when we are paid for these invoices, we will deduct this amount from our TSP. That gives you, and you see this in the middle of the slide, a quote second bite at the apple, right? Where you could get paid up front, and what we're seeing is both.
Right.
To sum up, we're seeing sometimes, right.
It's a proposal.
And so we're seeing some of these invoices get paid, and other times they're not getting paid.
Right. I mean, we've had some get paid the day before we've submitted the TSP, and like, oh my gosh, that's great news.
Yeah.
So now you can take it out. But yes, so I think a lot of that is you got to keep that communication open. You have to look at something else here. You have to look at, the population of contracts that are terminated and how that impacts your base or your rates for the current year billing. You're going to have to go back and adjust those, or you'll be way over billing your indirect rates.
We haven't even talked about that.
No.
I mean, this loss of business has many negative impacts.
Yes.
And you're touching on the profound impact it can have on your indirect rate calcs and how that impacts other contracts.
Yes.
It's another important aspect to consider.
Absolutely.
If this is a material part of your business that's been impacted. We talked about the establishment. We're accountants by background largely, and you can't overstate the importance of setting up. If it's a SWO'd contract, set up a SWO-specific direct charge number, a SWO-specific indirect charge number. And then if it's terminated, follow it up with a termination-related direct number and a termination-related indirect number, or not just two, maybe more. I mean, whatever accounting structure can be put into place. The reason for that is complicated, but it has to do with accurately recovering indirect costs.
Yes.
And a lot of times you would include what would normally be an indirect cost as a direct cost. I should say, what would normally be considered an indirect cost, right? In this case, you would charge it as a direct cost, largely because so many of your people are being used in an unusual fashion, resolving these or preparing these TSPs that take them away from their day jobs. And so in this case, that can really cause problems for application of your existing indirect rates.
Right.
There needs to be
Right.
reclassifications, et cetera, which is greatly helped by the establishment of unique charge numbers.
Yep, absolutely.
Right.
And I think the last thing on this slide here to take away is important is you've got your proposal, you're submitting it in, don't go over your funding amount, you're not going to get a mod to increase funding. So you got to keep that in mind.
It's another bogey to keep an eye on. It's just, there's several constraints that need to be monitored and stayed within which. All right. Again, it's our view. I know the preference in FAR 49, we've heard this a lot, is for the inventory basis. But for consultancies, performance, services, it can be particularly young contracts with not a lot of history. It makes more sense to use, in our view, the total cost basis. You might need, well, you do need, technically you need CO approval to do that. That shouldn't be hard. A lot of flexibility with FAR 12. We've had clients that have every single type of contract, and so you're going to have to use the various formats that are required, and that is not easy. You just have to, there's been some templates that are put out. We have templates. With FAR 12, there's that simple two-prong. It's basically percent of price. It's price-driven or milestone-driven. As well as the second prong is reasonable charges associated with the termination, wind down, severance, disposition inventory, whatever the wind down costs are. You mentioned real quick, there is a technical permission on a cost reimbursable contract to submit vouchers up to 6 months. That's kind of come up, but it's a judgment call in terms of how you do that. We definitely think that no reason why a voucher couldn't go up through termination.
Now, I think we're done. We did get a slew of questions all at once, and I'm going to ask our host if we could capture those so that we could answer them after this. Is that possible?
Yes, I can pull the analytics after we leave today, and then I can send all the questions that we got today to the two of you, and then we can get them out. We can either send the responses to the attendees, or I can include it with the post-session email from GoToWebinar.
Okay, that would be fabulous.
Is there any question we can answer now, or do we need? We have about a minute.
Well, we have 1 minute, and we've got 4 questions.
All right, I think it's best we do this afterwards because I want to. And I'm sorry we don't have time to get to the questions, but we will respond to them. First thing is develop a cost workbook or a model to cost all this stuff out before you do anything else. That's a general statement. Here are our bios. My email is on the upper left. That's me, my off-center photo, pardon me. Here's Clint, and here's his, you see his. Yes, you said it, not me. So that's it, guys. We have a reference section that we didn't want to talk through, but it's there. So feel free to go through that. And with that, thank you to everyone for letting us talk to you for an hour and a half. Hopefully you learned a thing or two, and we want to get you off on time. Again, everyone, good luck with their terminations. Hopefully this is helpful, and have a great afternoon.
All right, everyone, we're going to hang around here for a minute or so. We do have 2 final polls. The first one is up now. That's just please rate this session excellent, very good, good or fair. Like it was mentioned, I'm going to compile the questions that came in kind of near the end there. And so I'll send those over to Clint and Rob. We'll get all those answered, and then we'll send those out kind of in that post-session email that goes out with GoToWebinar. And then to each attendee who asked the individual question, I'll make sure to send the response directly to you as well. So our final poll is up now. Again, that's please rate this session. Excellent, very good, good or fair. And then we have our final password. Sorry about that, everyone. It froze for a second there. The final password is up now. It is basis. Sorry, the poll got stuck there, so I had to kind of leave and rejoin. The final password there is basis, capital BASIS. Basis is your final password. Thank you, everyone, for hanging out with us today. Hope you have a great rest of your day. Thank you again, Clinton, Rob. Again, that final password today is basis, capital BASIS. Alrighty, thank you, everyone.